Gold is going to $7,000 an ounce, and we are about to enter the worst recession in modern history. That is the latest warning from Durrett, one of the most respected gold and silver analysts alive, in his latest interview. If you do not know who Durrett is, you need to. He is the founder of the Gold Stock Data website and the author of How to Invest in Gold and Silver. He has been analyzing precious metals and mining shares for over 30 years. He called the gold breakout in February 2024 and went bullish within the first week of April that year. He called the silver breakout from $35 in August 2025, and his long-term target for gold is $7,000 an ounce. In this interview, he warns that every single recession indicator is flashing red, that the S&P 500 is finally starting to crack, that the debt doom loop is now impossible to escape, that the central banks are completely trapped, and that banks, colleges, and businesses are going to close in large numbers, and they are not coming back. And before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you are getting value from the videos, hit that subscribe button. It is free, it supports the channel, and you can always change your mind later. Now, here is exactly what he said.
So we have $2 trillion deficit, and we're borrowing about $1 trillion every 6 months. Our deficit is increasing. So we're reliant on debt. We basically weren't living off wealth generation. We're living literally off of printing money. And this was a doom loop. This is the reason why I got into gold, because eventually it pops. Von Mises said it so well. He said there's only two ways to get out from under a debt bubble. You either pay it back, which we can't do, or it bursts. If you look at consumer confidence, Michigan number, it's at 55. The all-time low is 54. As far as the consumer is concerned, the economy sucks. If you look at the cost of living, I would say 50% of families can't pay their budget. They're cutting something out. That's my point. You look at the Buffett Indicator, that's been screaming for a long time, right? If you look at unemployment, the unemployment rate, went from 2% all the way to 4%. That's usually screaming at recession. The inverted yield curve, 10-2, that normally points to a recession. This recent oil surge, anytime you have an oil surge, historically, you get a recession. The Sahm Rule. The Sahm Rule was kicked in. That normally says you're going to have a recession. The LEIs, those have been, telling us recession. The ISM numbers, 38 out of 48 months, sub 50. And then the housing problem today. Housing is a total mess. The inventory's going up. Nobody can sell their house. Everything is pointing to a slowing economy, going into recession. You had about $70 trillion in the stock market. About 20% of that is foreign money. And that foreign money, right now, I've said, going into this year, I said, what's going to happen with the stock market is you're going to get stuck in a trading range because there's nothing to really drive it higher. And you get into a trading range, eventually you're going to get a correction, which we have today, down 5%. And then that foreign money, that $20 trillion starts leaving. And then the retail, retail's is hot money as well. They'll leave too. And then basically it's just kind of, you get into kind of self-fulfilling prophecy, which I think is inevitable. I called it 4 battles to win the war. The first battle was gold breaking out, which was February in 24. Gold won the battle. The second battle, it took another almost 18 months. It wasn't until August of last year. That's when silver broke out from $35 and ripped and just took off from 35 to 70 by the end of the year. The third battle was the mining, was the HUI, which broke out with silver. The fourth battle is the battle we're fighting right now. And that battle is the S&P 500. And I always said that the last battle is going to be the ugliest, and it sure is. This is the final battle. So this is when gold and silver decouple. This is equivalent to 2002, that period, 2002-3, when gold and silver started outperforming the stock market. That's what we're waiting for.
So there is Durrett running through the full checklist of recession indicators, and every single one of them is flashing red. Consumer confidence at a 70-year low. The Buffett Indicator screaming, unemployment doubling, the yield curve inverted, the Sahm Rule triggered, 38 out of 48 months of ISM readings below 50, an oil surge that historically precedes every recession, and a housing market that is completely frozen. The real world data confirms all of it. The University of Michigan Consumer Sentiment Index just hit its all-time low, the worst reading in the 70 years they have been running the survey. The Shiller-Cape ratio on the S&P 500 is near 40, the second highest ever recorded. The Buffett Indicator is at 213%, the highest on record. On housing, Redfin reported 630,000 more sellers than buyers last month, the largest gap ever recorded going back to 2013. Pending home sales hit a record low. Homes are 30% overvalued. And in commercial real estate, the CMBS office loan delinquency rate hit 12.34% in January 2026, the worst ever recorded and worse than 2008. $930 billion in commercial real estate debt is maturing this year. The equity markets are confirming the crack Durrett described. The S&P 500 is down 4% on the year. All three major indices have broken below their 200-day moving averages. Moody's Analytics puts the probability of a US recession at nearly 49%. Goldman Sachs has it at 30%. February payrolls contracted by 92,000 jobs. And Durrett's point about $20 trillion in foreign money inside the S&P is critical. When that money starts to leave, the drawdown accelerates. Asset managers just sold $36.2 billion in S&P futures in a single week, a 10-year record. On the national debt, Professor Steve Hanke published research in Fortune showing $6 trillion in government assets against $136 trillion in total liabilities. The country is technically insolvent, and the deficit is growing by $1 trillion every 6 months with no path to repayment. Now, Durrett explains why the Fed is completely trapped and why what is coming will be unlike anything most investors have ever experienced.
They're absolutely trapped. There's no way out of this. The debt bubble has reached a point where there's no way out. And now we've used this term kick the can, right? And kicking the can was always injecting money, injecting liquidity, bailing companies out, expand the debt. When Greenspan left, the Fed's balance sheet was $800 billion, which is low, right? $800 billion, it was like peanuts. The Fed basically was under Bernanke, kind of old school guy. Bernanke came in 2006 and flipped the whole thing. He basically pulled a Reagan, and he started printing money. And so he's the guy that basically rug pulled the Fed. So now the Fed has, $7 trillion balance sheet. So he's basically 7x Greenspan. And so now the Fed is like, oh, we can just do what Reagan did. We can just expand our balance sheet. We can just print. The problem is inflation. They can't do that. They can't inflate their way out. It's very similar to what happened to Japan in 1989 when they basically had their bubble burst and all that foreign money left. Japan's stock market in 1989 was 50% of the global stock market. It's 50. We're about 60 today. And it collapsed down today. It's 5 today. So that's going to happen to us. Their central bankers, they tried to print. They tried, and they couldn't get their economy growing. They call it the lost decade. It's going to be the same thing for our Fed. It's going to be like pushing on a string. So Kevin Warsh, he's not going to print 5 all at once because he knows if he prints 5 all at once, he's going to create 5% inflation. 5% inflation kills your currency. So he can't print at will. He can print on the margin. The other thing where they're trapped, they can't cut rates severely. Inflation's not going away. So how in the world did they get the Fed funds rate down to 1%, which is what they need to restart the economy?
So there is Durrett drawing the Japan parallel that should terrify every investor holding US equities. Japan's stock market represented 50% of global market capitalization in 1989. Today, it is 5%. The US currently sits at 60%. And Durrett is saying the same structural collapse is coming. The Fed is trapped from every direction. They cannot cut rates because inflation is running at 3.3% and accelerating, driven by money supply growth and an oil shock that is pushing energy and food prices higher. They cannot print aggressively because that destroys the currency. And they cannot do nothing because doing nothing is itself contractionary in a weakening economy. The oil shock is making the timeline shorter. Brent crude has spiked above $112. The dated Brent price, the benchmark for physical oil deliveries, hit $144, the highest ever recorded. Gas has crossed $4.16 nationally. In California, it is is approaching $6. In Los Angeles, $7 a gallon. Diesel is forecast to peak above $5.80 this month. A third of the world's fertilizer supply has been cut off, which means food prices are about to spike on top of energy prices that have already spiked. On private credit, the freeze is already happening. Apollo and Ares have capped investor withdrawals at 5%. JP Morgan has started pulling credit lines. The private credit market has ballooned to over $3 trillion on opaque balance sheet. Rick Rule, who runs his own bank, has compared this to the CDO market before 2008 and is building cash specifically to prepare for a liquidity crisis. And the voices warning about this are getting louder. Jeremy Grantham, who Durrett specifically cites, has called this the worst bubble. Jim Rogers says what is coming is the worst he will experience in his lifetime. Ray Dalio is warning of a global monetary shift. Warren Buffett is sitting on record cash. These are the most experienced investors alive, and they are all positioned for the same outcome. Now, Durrett makes his case for where gold is going, what the coming reset looks like, and why he believes this is the end of the American empire as we know it.
We're not trying to make money in mining stocks in 2026. We're trying to get to the top of the mountain. We're climbing the mountain. And we're still at the bottom. We're still, we're not even halfway up. We still got a long way to climb, right? You have to keep your eyeballs up there on the top of the mountain because that's what we're after. So for me, the top of the mountain is $7,000 gold. I'm probably too low. That's my target, 7,000. Now, if you use 1% of 7,000 is $70 silver. And I think that's no chance in heck you're going to only get 1%. Use 2%, you're at 140, which is a more legitimate number. Use 3%, you're at 210. So I think silver will be somewhere 175, 180, somewhere in there. Now, we probably will rip to 250, 280 at a certain point, but it'll come back down. Only 1% see what's coming. 99% of people are clueless of what's coming. I've been saying this. I said that this is the last year of American greatness. And he said in his interview, this is the end of the American empire. And me and him are completely simpatico in that regard. Now, we're not the only people that are saying this. Jeremy Grantham, the king of the bubble, he said this is the worst one. Jim Rogers, he's been around since the 60s, fantastic investor. He said, what's coming? I know this is the worst that I'm going to experience in my lifetime. Ray Dalio, he's been saying this is a global monetary shift, people, right? So we're hearing some really big voices out there. Warren Buffett's all in cash. And I think when the recession starts, I've been saying this, it's not going to end. And it's going to be shocking to the system. The U.S. has been living beyond its means. We've been living beyond our means on the backs of foreign money. And that's getting rug pulled. I firmly believe that we're going to see revolutionary change. We're going to see banks close in large numbers. We're going to see colleges close in large numbers. We're going to see businesses close in large numbers. And they're not coming back. When these companies go out of business, they don't come back, right? Banks close, they don't come back. Colleges close, they don't come back. That's what's around the corner here.
So there is Don Durrett laying out the full picture, and his conclusion is as direct as it gets. This is the last year of American greatness. The recession is coming, and when it starts, it is not going to end. Every recession indicator on Earth is flashing red. Consumer confidence at a 70-year low, the Buffett Indicator at the highest level ever recorded. Unemployment doubled, the yield curve inverted, the Sahm Rule triggered, housing frozen, 38 out of 48 months of ISM readings below 50, and $20 trillion in foreign money inside the US stock market that could start leaving at any moment. The Fed is trapped. They cannot cut rates because inflation is accelerating. They cannot print because it destroys the currency. And the Japan parallel is staring them in the face. Japan went from 50% of global market capitalization to 5%, and their central bank tried everything to stop it. Nothing worked. The US currently sits at 60%. Gold is above $4,650 and Durrett is targeting $7,000. Silver is above $75 and he is targeting $175 to $180. The smartest money on the planet, from Grantham to Rogers to Dalio to Buffett, is either positioned for collapse or sitting in cash waiting for the opportunity to buy what comes out the side. And Durrett's final warning is the one that should stay with you. Banks are going to close, colleges are going to close, businesses prices are going to close and they are not coming back. This is not a correction, this is a reset, and the people who are not prepared for it are going to be the victims of it. The question is no longer whether the system is breaking. The question is whether you are positioned on the right side of what comes next. Stay informed, stay prepared, and make sure you are subscribed because we are tracking every development as this unfolds.